All right, good afternoon. Mike and David here today. Waited a little bit for the markets to clear up on how they accept the NVIDIA earnings yesterday. That will be one topic, NVIDIA earnings. Then I'm going to talk a little bit about German inflation. Why does that matter to us? I'll explain why. And then I'm going to turn it over to David, and he's going to talk about a little bit about coming through the end of the year, 401k max versus IRA, some of the decisions that you may make as you come towards the end of this year. But before we get started, I must remind you this is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and David's alone. So I will start off by showing you the market today, and you'll like it. Green, green, and green. So when you see green and the NASDAQ up almost 1%, you're probably thinking, man, NVIDIA's stock must be tearing it up. And I will start off by saying they're not. It says stocks rise even as NVIDIA shares decline on results. And it's very confounding in a sense. I'm going to go over NVIDIA's earnings, and they were fantastic for the third quarter in a row. So I'm just going to start off. They're fantastic. And I almost like it to the, if you do fantasy football, your team scores a whole lot of points, but you lose anyways. And that's the way it feels like with NVIDIA today. Their earnings I'm going to go into, incredible, and yet the stock is selling off just a little bit, not much. And so here is the news. And I watched this in the after hours. There was a pullback yesterday, and it kind of battled in the evening to see if it would end up on top. But the shares overall have still risen 150% this year, so that's pretty good. As far as revenue, was up 122% from last year, so that means it more than doubled. They even issued a $50 billion stock buyback, and here was the final tally. Their profits more than doubled to $16.6 billion. So I mean, just fantastic numbers, incredible performance, and yet here, let me show you the stock graph, and I'm just showing you a 5-day graph so you can kind of see the sell-off here. And I don't even like to use the word sell-off. It's trading at $121 a share. There was a time yesterday it was at 123, so it's not like it's down much. It's down about 4%. Now, and you could say, wow, if I just bought NVIDIA 5 days ago, oh my gosh, I'm down, 5 or 6%. But if you bought it before that, let's look at their year-to-date graph. Obviously, they've done very well year-to-date. The numbers, the stock price may look small just because they had their split where they went down to $120 a share. Right now, they're trading basically at their split price. So NVIDIA is in our models, our more aggressive models. It is a key holding within Ankerstar Wealth. So nothing. What the earnings that came out will change nothing there. I mean, it is still a great company. Maybe what it is it was priced to perfection, we'll say. And even though the numbers came out great, still some people taking some profits. And maybe that's why the rest of the market's up. We freed up some NVIDIA money. It went into other holdings out there, expanded it beyond NVIDIA because the market's doing great today. One other reason the market might be doing great, and this may surprise you that I would call this out, is German inflation is only a 2% increase. Now you're like, wow, United States, we'd probably be happy if ours was only 2%. I think the last was like 2.9. It's getting down there. So Germany, they expected it to come in at 2.3%. It came in at 2%. Why does that matter? Now, I mean, other than our, hundreds of German listeners. I'm just kidding. Why does that matter to us in the United States, what Germany's doing? And what I pulled up here, or pulling up, is these are the top 15 countries by GDP. And I'm going to zoom in on this a little bit. And you can see United States is number 1, China's 2, Japan's 3, and Germany is number 4. So if the fourth biggest countries' GDP and their inflation rate is only 2%, that bodes well for the rest of us. And obviously, where the Fed making their decisions going forward, they're watching the inflation. And this is just one more indication, because we really are a world economy. We trade with the world. We really are. So, this is one more indication that inflation's coming down. And I took this as a piece of good news and another reason why the market is up today. So with that, I will turn this over to David, and he'll talk a little bit about 401ks and traditional and Roth IRAs.
Hey everybody, how are you guys doing today? Sharing the wrong thing, I think. So anyway, 401k here. They are talking about, should you max out your 401k? Some experts say that you shouldn't. So I was just kind of looking through this article, and it was talking about how much you can contribute and all that stuff. And, you know, I like this line. Generally, it's a no-brainer to save at least enough to get the full matching contribution, which I actually really agree with, because
100%.
yeah, I mean, because it's pretty much 100% guarantee return on your money, So depending on, the percentage, let's say you get $1 for every $2 you put in, then you get a 50% return. So I take the free money, take the free money. And then after that, should you be maxing out your 401k? That comes down to, debt, stuff like that. But let's say that you're debt free and that you're in a good place. If I were looking at this as a layman who's not, who has no financial background whatsoever, and I don't know about IRAs, this doesn't really go into other ways of saving money so that for an efficiency standpoint. So, one of the questions I always like to ask is, does your money work as efficiently for you as it can? So is it a good idea to max out your 401k if you qualify for an HSA, a health savings account, and you're not putting anything in it? Probably not. Is it a good thing to max out your 401k if you're not contributing to an IRA? Even if you don't qualify to contribute to a Roth IRA directly, you can do the backdoor Roth IRA, and you can use those savings to be growing tax-free. So, let's say that you can only contribute $20,000, then the way I look at it is like, you should do the match first, then HSA, IRAs, and that way you can make those dollars work for you tax efficiently.
Mm-hmm.
And then once you're finished doing that, then you go back and you contribute as much as you can into the 401k so that you can, retire when you want. And not that I ever advocate for retiring, I advocate for people doing what they want to do. And when your money pays you what your paycheck is paying you, and you have a boss that's a jerk and you don't want to work for them anymore, you don't have to. You know what I'm saying? So it gives you freedom and flexibility, and that's really what I'm looking for. So, and it does talk about prioritizing high interest debt, plan for your short-term goals. Do you have an emergency fund? And all of that you should have in place. But if you do have that in place and you are, then where do you go? How do you get more sophisticated in what you're doing? And that's really where, Mike or myself, or if you're working with Steve or Joel, that's where we come in and we help you answer that question from an efficiency standpoint, because really we want your money working for you as efficiently as it can. What do you think, Mike?
Yeah, a couple things. One rule of thumb, your match on your 401k, whether it's 50 cents on the dollar, dollar on the dollar, there is no investment that returns that much in one day. 50 cents on the dollar automatic. You should always get that match on your 401k. And another thing is, when it mentions like high interest debt, like if you have credit card debt, there's no investment that I could put you in that I could say could out earn paying credit card interest at whatever, 20, 25%.
Yeah.
I mean, pay that debt down. So, and then like David said, after that, then you got some decisions on how you balance it out. I did have years ago where I did max out a 401k, and you want to be careful that you don't max it out early and lose the match from your employer, because your employer pays the match on each of your paychecks. So you wanna max it out into the last paycheck. Like that last paycheck maxes it out, and you get the match. I never accidentally did something else, but I was aware of it, and I was like, okay, I don't want to max it out in November, and then December my employer's like, oh, well, we can't give you any more match because you can't put it in. So, you know, it's a good problem to have if you get there. But as David said, always you can talk to one of us at Ankerstar Wealth about kind of how to balance all this and what your options are. And you know, there's lots of factors to making these decisions. But you know, number one, always get the match. Number two, don't pay credit card interest debt. You know, those are easy ones there. After that, it gets a little more complicated. But thank you, David, for that. Great advice, especially as we come in. It's kind of like the end of summer. You
It's
know,
September on Monday or Sunday or whatever.
football season's about to start. You know, it's still warm where I'm at. I know it's warm where David's at, but it's going to get cold. So, anyways, with that, we will continue to watch NVIDIA. You know, the whole market, it feels like the whole market's up except for NVIDIA today. But you know, I know that's not totally true, but it just feels like that across our book of business. NVIDIA, I wouldn't be surprised if they come up at the end of the day. At the end of the day, someone's like, well, wait, NVIDIA's on sale for 4% off, I'll buy. I would not be surprised to see some movement there.
I was about to say Dollar General is down almost 30% on the day.
I did see that. I knew that one, but that's not in our book. You know, the Dollar General. I was actually I did not look up the earnings on it. You know, and I was thinking Dollar General, I'm pretty sure they don't charge $1 anymore. You know, it was like $1.25, $1.50. I don't know.
Yeah, maybe. It's generally $1.
Oh, is that what it is? Generally $1? You know, I didn't know what Five Below was till my daughter told me, oh, everything's $5 and below. Oh, okay, I get it now. Yeah. I'm going to create 10 below next. I don't know, but that's all we have today. Thanks, everybody. Have a great rest of the day.